Oh, you didn't have those on last time.
No, you know what? I thought something seemed different.
That's
Hmm.
what happens. All right, here we
Why
go.
do I need them?
No, you don't. If you want to hear me in here, sound good? Sound better? Sound worse? Sound better? Sound better? Sound worse?
Ooh,
It's
no, it should.
up to you.
All right.
All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. In the last segment, we talked about a few different subjects on why it's important to have a plan, but also why to have the world leader in financial education, financial literacy. Trading Academy has been doing financial literacy programs and investing and trading workshops all across the country and the world. 29 on their 29th
29.
year now,
Right.
and that's why it's so important to have an in-person place to go to build these skills, to learn how the market works, how it functions, and how to make those smart investing and trading decisions in your life. Because it takes other people in a community to have those goals and those wishes, to have a plan for that. If you want to start that plan, just simply text the word investing to the number 210 right now for 2 seats for a free trading and investing workshop locally right here at the Academy or at one of our locations all across the metro. Text investing to the number 210 or go to tradingacademy.com and pick your own seat and your own date there. Al teaches these, I teach these as well. We have a good time talking about how these markets and great folks are coming into these classes, these free investing and trading workshops. Also, follow and subscribe to the podcast. We have so many followers now lately, Al. It's been crazy how
Okay.
the path of this podcast has been surging to the upside, and we're trying to make this the global #1 podcast on the financial markets. Just go to Investing and Trading Live wherever you listen to your podcast, Apple Podcasts, iHeartRadio, and Spotify. And make sure to hit the bell so you get notified when segments come up. We do these weekly and so almost daily on the podcast. What are we on? 1,327 episodes now. So really surging to the upside with our podcast. So Al, with this next segment here, I kind of ended that last segment and I gave a little teaser about being efficient with your capital, having
Mhm.
efficiencies with your time as well. And it takes using the right vehicle to be able to do that. And when I talk about vehicles, there are different ways you can get anywhere
Right.
in life. You can take a different vehicle. You can take a car, you can take a bicycle, you can take an airplane, a jet, you can take we'll call it a motorhome. There's many ways you can get somewhere wherever you're trying to go. Now, the speed that you're trying to get there is going to take the right vehicle, but also the safety of it as well. Which the same thing goes with the financial markets. If you're trying to build a retirement account, you want to be using the right vehicle to be able to do that. Some people maybe just don't have hundreds and hundreds of thousands of dollars or millions of dollars to start that. Which, by the way, you don't. So you're going to want to use the right vehicle if you're starting that portfolio, or if, say, you have millions of dollars and you want to protect and continue to grow that or leave a legacy for your family at one point, you're going to want to have the right vehicle that's going to be designed to do that as well. So, on this segment here, I want to get into those topics and those vehicles. First off, we'll start with that are designed for income. So, Al, let's just say somebody is working now, they have a great job, well, six-figure income, but they know it takes extra income or a secondary income to build extra wealth. And they don't want to go do another job. They want to use what they already have. What are some techniques and strategies that we do here at the Academy that may be new to some people because they just don't hear some of this stuff that have been around for a long time?
Yeah, and they're new because, excuse me, they're new because Wall Street is basically kind of keeping those things secret. Wall Street basically tells people to do one thing, and that's just buy something, put a portfolio together, and then just hold on to it for years or decades. And if you are looking for income, that's not the way that you use the markets. That's more of a long term. investor. There's a difference between, and we use these words a lot, traders and investors. A trader is just simply somebody who gets into and out of a position on a shorter time frame. And if you're looking for income, you need to basically be a trader, not a long-term investor. And the problem is that too many people that think they're traders end up becoming investors. And what I mean by that is they just hold on to losing trades too long, hoping for them to come back. And the majority of them don't. And they don't because in reality, they were bad trades to make in the first place. So to be successful, let's first of all figure out what you need to be. Do you need to be a trader or you need to be an investor? Because the way you use the markets is different. If you're looking for income in the time within which you need it is up to you. Is it daily? Is it weekly? Is it monthly? There are different strategies and assets you can use to kind of fit your time frame.
Or vehicles.
Or vehicles, like vehicles, exactly.
What are some of the vehicles that we cover in those free investing and trading workshops, just to give a snippet on what's covered in there, so that way people can make the right decision to come into those?
Yep, pretty much all of them. We do cover stocks, but we also talk about the vehicles for short-term income, which are options, the futures market, the foreign exchange market. If you don't know anything about those, there's a good reason for that, because people haven't been teaching you that. And in fact, they probably are telling you that they're too risky. They actually can be the least risky assets to trade if you know what you're doing and you know how to make sure you manage risk.
Let me give you an example on that.
Let's do that.
All right. So you drive a car, right?
Mm-hmm.
I drive a car. We can minimize our risk in the financial markets. I'm sorry, in our vehicles, right? We can minimize our risk by driving seatbelts and all that stuff. Now, what you're alluding to is I could put my 8-year-old son in my vehicle and say, have it there, have at it, go drive. Now, that would be very risky because he doesn't know what to do. He doesn't know how to do that. But what if I trained him? This is what the gas pedal is for. This is what the brake is for. This is what you do when you turn. You always want to be defensive driving. Protect yourself. Wear your seatbelt. Hopefully, I'm not doing that at 8 years old, but maybe at about 14, 15, and 16, you're starting to teach that. Right. Same thing goes with the financial markets. If you don't know, you don't know. You're just going to do what you think is right, what you know is going to be wrong, but you still do it. Why is it so important to go to a hands-on place, to go a physical place to build and learn these skills?
Well, for one thing, people learn at different paces. Some people, it takes a little bit longer. They need a little more hand-holding, so to speak. Some people pick things up quickly, but they want to accelerate them even faster. So if you have somebody you can come in and sit with and explain, what's your goal? What are your concerns? What are your issues? What are your problems? What are your goals that you want to have somebody help you achieve? That's what we do. That's putting together a plan that's specific to each person, because everybody's a little different as to what they do. And part of what we do is go over the fallacies that are out there, and it's probably as important to learn what you're doing wrong as it is to know what to do right. Because to be honest with you, the making money part of it is probably easier than the keeping money part of it. We mentioned risk management. And if you know how to manage risk, and that's the first thing we teach our students, if you do that, where you in effect keep any losses you might have small, it only takes one or two really good trades to end up having superior results. And remember, and this is a mistake we see a lot of people make, they come in and they think they have to trade every day. They have to trade multiple times. Listen, you don't get paid for activity. You get paid for being right. And one of the ways that you can do that and keep your risk controlled is to use leveraged assets. What you want to try to do is make as much as you can in as short a time period as you can. Who does that? That's Wall Street's job. Their job is to make as much money as they can in as short a period of time as they can. And that typically, unfortunately, means taking advantage of the public. So if you understand what Wall Street is doing, so you can just follow them, you can trade more on their side instead of trading against them. But you don't have to trade a lot. You just have to make sure when you're right, you make more money than you lose when you're wrong.
I like that. I want to make sure our listeners understand that you don't get paid for activity.
Right.
You get paid for being right.
Who gets paid for activity is the broker.
Exactly. That's or an hourly employee. You get paid for activity, being there and doing something. So that's what the key of the market is not to go somewhere and work for your money. is to have your money work for you. And it's not
Exactly.
by being super active, it's by being active at the right times and at the right price. And then you let it work for you. You shouldn't be watching your computer screen. You don't have to trade every single day. You can set up strategies that are designed based off of your schedule, your time, your schedule, and your capital. And that's why what we talk through in these free investing and trading workshops here at the Academy, at Trading Academy, is what can you do with your time, your schedule, your capital, whatever that may be. People have limited time. People have busy schedules. Some people want to maximize the efficiency of their capital. And that's what we go through in these investing and trading workshops all across the metro here and at the Academy, so that you can gain some insight on what might be right for you based on where you are now and where you're trying to go. If that's you, if you're that person that is looking to do some of those things, come into one of these free investing and trading workshops simply by just texting the word investing to the number 210, and that's for 2 seats, one for you and one for a friend. Text investing to the number 210, or go to tradingacademy.com and you can pick your own seat there. That's tradingacademy.com. If you're an old school caller like Al and I, just call in by calling 952-814-4410. That's 952-814-4410. We got more to discuss. We covered a little bit on the income side of things. We're going to talk about retirement next. If you have retirement accounts, you're looking to retire at one point in your life, stay tuned, and we're going to discuss that on Investing and Trading Live. We will be right back. All right. All right, we got a segment 4 here. Last one. And hello to some of the people in the chat here. I like the names on here. Those Stockover or something, I seen the name was. I'll check it out here in a second. Chicken Jockey, that's what it was. And Frederico, hello on the podcast. I like the names. I like Chicken Jockey. That's pretty clever. All right, let's go to the next one here. Got 11:40 on the clock here. All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, I am your host, Josh Lillquist, on the airwaves all across the metro, weekdays and weekends. Make sure to stay tuned every single week. We talk about stocks, options, futures, forex, income strategies, retirement strategies, and how to make smart investing and financial decisions within your life. If you missed seats for that free investing and trading workshop that we do locally, live here at the Academy and all across the metro, simply just text the word investing to the number 210, and that'll be for 2 seats, one for you and a friend. Most people bring their spouse or significant other. Text investing to the number 210, or go straight to our website, tradingacademy.com, and you can pick your own seat and date there. As I mentioned earlier, if you're old school like Al and I, just call 952-814-4410. That's 814-4410, and we'll make sure we get you a seat and date for the times that work best for you. Follow and subscribe to the podcast, Investing and Trading Live, wherever you listen to your podcast, Apple Podcasts, iHeartRadio, and Spotify. We appreciate all of our YouTube live viewers as well. Just go to the Josh Lillquist YouTube page. So with all these different opportunities in these markets, Al, there's still a lot of people, as you mentioned in that Dalbar study, I believe it was, most people are not getting the returns that they need. And it's really unfortunate. That's a lot in retirement accounts. People have retirement accounts. They work all their lives, 20, 30, 40, 50 years, sometimes 60, 70 years, some people, but they just don't have enough. They want to be able to build a future for themselves and their families, which is great. We're seeing more and more people want to be able to build a legacy for their families that are coming to the academy here. But there are a lot of challenges with the 401k. You know, the 401k, it's great because it's helped people learn how to save. Correct. But if that's what everybody has, and the stats are out there, we've talked about this a few times over the last couple of months, most people don't have enough money in their retirement, in their 401ks. There's got to be some sort of problem because of that. So you've been meeting lately with a lot of people that have come to these investing and trading workshops that we do here at the academy, and they have questions about those 401ks. What can they do differently? Now, you have the typical approach out there, Al. You have the simple buy something, buy a crazy mutual fund, which are the most devastating things in a retirement account, and just hold it long term and time in the market, and you just got to have it in the market because blah blah blah. Well, we talked about in the first or second segment it was today about, yeah, well, cool. Yeah, say you make a little bit of money in there, but your dollar is being devalued day after day, year after year. So you can do less with those dollars by the time you want to retire. The dollar has devalued 80% or 90%.
90% since 1950.
There you go. So there's a problem with what you're doing, and it's not your fault. It's what you're being conditioned and told to do. Now, when people are coming to these investing and trading workshops here at the Academy, Al, what are some of the questions that people have, and what differentiates Trading Academy from old school methods to new school, what's actually real nowadays?
Yeah, well, a lot of people that we're seeing recently are either getting ready to retire or have just retired, or maybe been in retirement for a while, and they're really concerned because they thought by listening to Wall Street they were going to be in great shape when they retired.
Who's Wall Street?
Wall Street are the big firms like Goldman Sachs, J.P. Morgan, Merrill Lynch,
Schwab's, Fidelity's even, right?
Oh, absolutely, yeah.
Yeah, so
any of those
the companies people know, and they quote unquote, they feel like they trust them, but they're salespeople is what they are.
Yeah, well, those companies are in business to
no
make,
company in particular, by the way. I'm not putting anybody down.
I
I'd hate to have somebody come after us now.
No, you know, those companies are all in business to make money. And one of the ways that they can do that is to keep people in the market as long as possible. The 401ks, one of the problems with the 401k is that you're almost forced to stay in it because you pay a penalty if you take money out before you reach 59 and a half.
So here's a question I have. Let's just say somebody has $1 million. You got to pay to get your own money?
You do.
Boy, that just sounds like a rigged system to me there, doesn't it?
Yeah. Who's benefiting from that?
Yeah, how convenient.
Yeah.
Think of it. It's common sense if you really break it down. You got to pay to get your own money.
Yeah, the longer you stay in the market, let's say with the 401k, which is, that's what everybody is kind of conditioned to believe is the go-to for retirement. You put your money every time you get a paycheck, some of it is taken and put in the 401k. Maybe your company matches part of it.
Which is cool.
That's cool. That's free money. So it's the free money part. And as you mentioned, it forces people to do something.
Well, it's not technically free money because you still got to work there. You still got to put your time in for that. So that your time is worth a lot.
That's true. But the real problem is that you're forced to stay into something that has mediocre returns at best and that has high fees. And the simple fact is that most of the 401k plans out there are just too expensive. And an ordinary American household now with 2 working adults, they're going to probably cough up over $155,000 in 401k fees over a lifetime. That's according to a think tank, Demos. And then here's the interesting thing, Josh. Over 70% of the people polled didn't even realize they were paying fees.
Amazing.
Yeah, and we talk about these in the class. I think people are really kind of shaken by the fact that they're paying fees that are much higher than, even if they know their fees, they think that they're much lower.
Let's break that down a little bit though, Val, because I don't know if you have the stat on what the average 401k is. If you have that, give me a thumbs up and we'll continue that. But think about this. What Al said is the average household is paying over 100,000 in
Over
fees.
155,000.
So over 155,000 in fees. Do you have the average 401k? What they say?
Yeah, it varies, but you figure, some of this stat, that 155,000, I think, was based on a 2% fee.
Which doesn't sound like a lot, but it's a lot.
And it's actually very conservative.
Yes.
Most people are paying much more than that. In fact, if you look at just mutual funds in general, the average fee for a mutual fund is closer to maybe 3.5% in a retirement plan, 4.5% in a non-retirement plan.
Okay,
So
that being said, I don't mean to cut you off, but I did cut you off like an interrupting cow. Moo. But
Okay.
we have a lot of people. I want to make sure our people realize and understand that we have free investing and trading workshops to uncover this and unpack this a little bit. You can come on to one of those by texting the word investing to the number 210 to learn more about those fees and 401ks. But what differentiates what we do here at Trading Academy so you're not in that boat?
Well, we talk
sinking essentially.
Yeah, exactly. Well, first of all, we want you to understand what's in your 401ks. Most people don't remember what's in their 401ks. Most people don't even know what they put their money in. They put it into something that had kind of a fancy sounding name, and they think that just because the S&P 500, for example, goes up maybe 10, 11% on an annual basis, that they're going to get the same things, maybe because they're in what's called an S&P 500 index mutual fund.
So basically what you're saying is most mutual funds, I think the stat is 90% underperform the market.
They underperform the index that they're supposed to perform with. And there's a couple of reasons. One is the fees that are being taken out.
Mhm.
If you look at just the returns of an index, there's no fees being taken out of that index number. And then also transaction fees. The S&P 500 doesn't keep the same 500 companies forever. They're continuously changing. And then there's transaction fees there. So
what are some of the things at the workshops that do we talk through that might be a little bit different to minimize those fees?
Well, self-directing, for example, and even within your 401k, there may be some things in there that have lower fees than you're paying, but you need to understand what they are first of all. So let's find out what's in your 401ks. Maybe what you want to do is, instead of continuing to put money in a 401k after that match has been met where you get the free money, why don't you look at setting up a self-directed IRA? That way you have many more choices. There's no fees. There's no charge for most brokers to have that self-directed IRA, but you can invest in many things that you don't have access to within a 401k. Plus, and this is really critical, you can have protection on your assets in a self-directed IRA. It's almost impossible to do that in a 401k. So with a 401k, you're basically accepting the fact that when the market crashes or corrects, you're just going to write it down and then hope that it comes back quick enough where if you're in retirement, you live long enough to see your portfolio return to where it was maybe 5 or 10 or 15 years ago.
Yeah, there was a show back in the 90s. Some people that are probably in their 30s and probably 40s right now know what I'm talking about if you're listening right now, called Saved by the Bell. And there was a little slogan they were talking about. In this case, they were talking about, say no to drugs. And the slogan was, would I use, in one word, would I use dope? Nope. I'm going to change that a little bit. I'm going to thank Saved by the Bell for giving me this idea. In one word, would I use hope? Nope. And that's what you got to do, is not use hope in your retirement accounts. Have a strategy that might be able to do things what you want to do. And by doing that, it's self-directing, making your own decisions. And that's why we have these free investing and trading workshops here at the Academy. So it's to learn what you can do to make your own decisions. That way you can make smart decisions for what you need to accomplish, not a stranger. To come into one of these classes, simply just text the word investing to the number 210 for 2 seats for a free trading and investing workshop on self-directing or 401k management, essentially your wealth or retirement accounts. Al, let's hit them up with today's tip of the week.
Well, Josh, you don't wake up one day and your life is suddenly exactly how you imagined it. No, you wake up one day and you decide to make it that way. You've got a choice. So why not choose the lifestyle that you imagined? You have to take the responsibility for the change you want, by the way. You have to take action because nothing is going to change unless you do. There's a difference between people that achieve their goals and those that don't. And that's that those that achieve their goals simply took action. The choice is yours. This might be the best time in your life to make that change.
I like that. Sometimes you got to make choices, but to do better things, you got to make the right choices, but you got to do that today. Come into one of these investing and trading workshops by texting the word investing to the number 210-210 or call 952-814-4410 for that free class. Trading Academy. Invest differently, smarter, skillfully. As always, same time, same place next week. Until then, retire young, my friends.